One thing one thing I usually tell traders to stay away from in trading is trying to play profit, trying to predict what the market is going to do after a major news event. For example, the one we had today with the federal funds rate. A lot of analysts were anticipating for a rate cut, and so many traders were looking for buy positions on the euro, sell positions on the dollar XXX pairs. And in this video, I'm going to share with you a simple example why trying to predict what the market is going to do after major high impact news is a recipe for disaster. And we're going to be using Euro US dollar and US dollar itself as points of reference. And looking at this right here, you can see that after the news event dropped, the dollar dropped drastically to the downside. So there was a rate cut, yes, 50 BPS. And after that, the market dropped drastically, running sell-side liquidity. After a run on sell-side liquidity, we created high resistance liquidity right here. And look what we have right here, low resistance liquidity. So a lot of traders are already in sell positions, some of them stop losses. For a lot of traders who were in sell positions for USD XXX pairs, stop losses resting right here. Those are wiped out. The other ones, stop losses resting right here. This is low resistance liquidity, potentially my next draw on liquidity. Now, it doesn't mean that overall that I'm not bearish on the dollar. In the long term, I'm bearish on the dollar. I want to see a continuation to the downside. But in the short term, I still have my key levels above this low resistance liquidity, where I'm anticipating to see the dollar gravitate to. So everything the market is doing right here could potentially lead us to rally. And there's so much liquidity right here now with so many people selling the dollar, buying the euro, so many liquidity. And I'm going to show you what this also looks like on the euro as well. Now, looking at the euro right here, you can basically see that on the euro as well, you can see how price rallied to the upside after the news, the high impact news came out, rallied to the upside, took buy side liquidity. Look at what we mitigated. We mitigated an inefficiency. After mitigating this inefficiency, what next do we see? Rejection. What do we have right here? Right here we have low resistance liquidity resting right here. Low resistance liquidity, easy key level that price could gravitate to. Price can easily drop below this key level to run out these positions. So any trader who was buying the euro because of the rate cuts and whatnot, stop loss right here, they're already out of the trade. They've been wiped out right now. Then the next traders, stop losses right here. And then the ones that bought in early, stop losses resting right here. Now, these key levels, I wouldn't even look for a buy to buy from all these key levels. And the reason I wouldn't do that is because this is premium. This is extreme premium zone. Just take a look at this. Using the Fibonacci from the high to the low, this key level right here is extreme premium zone. Why would I look for a buy at an extreme premium zone? There are two things I can do at an extreme premium zone. One is stay on the sidelines. Two is look for a sell. If I don't see any of these two, I'm doing one of these two. It's either I'm staying on the sidelines doing nothing, I'm looking for opportunity to sell this. Those are the two things that I can do. And right here, this is our equilibrium. So if I'm looking for a buy, I'll most likely prefer to buy below equilibrium, which is discount. And if we're not there, I'd rather be on the sidelines. So like I said in the beginning of this video, trying to predict where the market is going to go, trying to predict where it's going to go after a high impact news is a recipe for disaster. And if you're a trader and you keep doing this, you are only inviting mental drawdown, because you would take significant losses that will potentially wipe out your accounts, blow your accounts. And the best thing to do is no trade is better than a loss. If you enjoyed this video today, give it a thumbs up or follow for more. I'll see you in the next one.